We start off with Asia, where Japanese government data has shown that core inflation in Tokyo rose to 2.4% in December, up from 2.2% in November, driven by higher utility bills and food prices. However, inflation, excluding fresh food and fuel, a measure closely monitored by the Bank of Japan, eased slightly to 1.8% from 1.9%. Service sector prices increased 1% year-on-year, reflecting rising wages and strengthening demand, a development seen as supportive of the BOJ's inflation target. Policymakers will assess these trends at the upcoming Jan 23 to 24 meeting, with some analysts expecting a short-term interest rate hike. Moreover, Japan's industrial output fell 2.3% in November compared to October, marking its first decline in 3 months. Preliminary data from the Ministry of Economy, Trade and Industry showed that the seasonally adjusted production index stood at 101.7, following a revised 2.8% rise in October. The decline was driven by weaker exports of semiconductor manufacturing devices and cars. The Bank of Japan has released its first ever estimates on the financial impact of future interest rate hikes, revealing potential annual losses of up to 2 trillion yen in fiscal years 2027 and 2028 if short-term borrowing costs rise to 2%. The estimates reflect the BOJ's commitment to gradually raising rates to neutral levels in the coming years. The analysis considers scenarios where short-term rates increase to 1 to 2%, with spreads between short and long-term rates ranging from 0.25 to 0.75 percentage points. Losses are expected to decrease starting in fiscal 2031 as the bank's earnings recover. The bank ended its decade-long ultra-loose monetary policy in March, raising short-term rates to 0.25% in July. In China, the National Bureau of Statistics has stated that the country's industrial profits fell 7.3% year-on-year in November, slowing from October's 10% drop. Despite the improved monthly figures, 2023 is said to mark the steepest annual profit decline in over 2 decades due to weak domestic consumption. Economists noted that recent government stimulus measures have started to show some positive effects, reflected in the slower profit decline and a less sharp drop in factory gate prices. The producer price index fell 2.5% year-on-year in November, improving from October's 2.9% contraction. China's National Bureau of Statistics has revised the 2023 GDP upward by 2.7%, bringing it to 129.4 trillion yuan. Kang Yi, head of the bureau, stated that China's economy has withstood the test of multiple internal and external risks over the past 5 years and maintained a generally stable trend while progressing. Despite this adjustment, officials anticipate a minimal impact on the projected 2024 growth rate of around 5%. The revision follows the 5th National Economic Consensus, reflecting China's resilience amid recent challenges. China attributed its upward revision for 2023 gross domestic product to changes in housing sector calculation methods, which would also affect the size of the economy in 2024, but have little impact on the growth rate. The adjustment stems from changes in the housing sector calculation method, adding 1.34 trillion yuan to housing services contribution. The National Bureau of Statistics stated that while the revision affects the economy's size in 2024, it has little impact on the growth rate. The share of tertiary industries, including retail, finance, and property, rose to 56.3% of GDP, contributing to the revised total. Still in China, the National Bureau of Statistics has released the outcomes of its 5th National Economic Consensus, showing significant growth in the country's secondary and tertiary industries. By the end of 2023, there were 33.27 million legal entities in these sectors, a 52.7% increase from 2018. Additionally, self-employed businesses grew by 39.8%, reaching 87.995 million. The top three sectors by the number of entities were wholesale and retail, leasing and business services, and manufacturing, with wholesale and retail making up 30.6% of the total. Geographically, the eastern region held 53.9% of legal entities, while the central and western regions saw growth in their shares. The World Bank has raised its forecast for China's economic growth, projecting 4.9% in 2024 and 4.5% in 2025, citing the impact of policy easing and strong exports. However, it warned that challenges like subdued household and business confidence, a struggling property sector, and an anticipated U.S. tariff hike could weigh on recovery efforts. Mara Warwick, the World Bank's country director for China, said that addressing challenges in the property sector, strengthening social safety nets, improving government finances will be essential to unlocking a sustained recovery.